Lost generation. So listen, what's going on in the stock market? I'm going to try to do this as quickly as I can while still being succinct. One thing you got to remember, when the stock market drops, it doesn't just disappear into a black hole. There's someone on the other side of the trade, and there's a lot of ways they can be on the other side of the trade. But when the market goes down, people are making just as much, if not more, money than when it goes up. So when you throw money in on a long position, you just got money sitting there in the market. You got money in a 401k. It's held captive in the market by taxes and fees. So when the market goes down, what you're really seeing, folks, is a wealth transfer. The insiders, the institutions, the traders, they're all winning on that downslope. You're losing. And I put this video out there because it is 11:26. It is Wednesday, the 18th of March. Okay? This thing's just getting started. We're not at a bottom. I know 3 people that put in 80 grand combined and have been touched by the traders, the central bankers, the fear, the panic. They're down 30% right now. And I'm going to make a prediction. Tomorrow, not going to be a pretty sight. It's not going to be the rebound everyone's hoping for. Why? Because you got to watch what's going on in the euro. The ECB just blew a bazooka of almost a trillion euros, printing money, throwing it into the economy. Futures aren't responding well. It's not looking good for tomorrow. And I just want to be clear here. This isn't a collapse of the market because of COVID. This is a collapse that was destined to happen since ZERP and QE began and never truly ended. And people think that I'm crazy, but I've been talking and watching this develop since 2009. This was destined to happen at some point. Just COVID was the ember that came along and touched it off. And I just want to briefly walk through the various things that have been done here, because this is absolutely insane. It's unprecedented. Okay, first we had the $1.5 trillion in repos by the Federal Reserve. Then we had $700 billion in quantitative easing, aka money creation, aka money printing, aka injecting money into the market to prop it up. We had that. Now we've got this new bailout package where everyone's going to get a thousand inflation bucks, and people are all happy about this, begging for their inflation bucks. And maybe rightfully so, because the companies are getting bailed out. Why shouldn't everyone get a taste of the action? But here's the problem. That money ain't for free. They're creating it. On the back end, somewhere along the line, it will create a distortion. If it doesn't create a distortion, it will create inflation, and you're going to end up paying for it somehow. Ain't nothing for free. So that's just the Federal Reserve intervention. So we're at a couple trillion right there. No big deal, just a few trillion, right? So that's falling on our heads. Then you got the ECB. They're blowing bazooka after bazooka money printing, throwing it into the markets. And actually, you've got this happening in pretty much every major European bank. They're throwing it in. A couple of these countries have banned short selling. Trump's giving speeches 30 minutes before market close almost every day. They're desperate. You don't see the desperation. Listen, what it's fell right now is just on COVID fears, panic selling, and insiders winning on the short end. It's not over. And do you know why it's not over? Because it hasn't factored in Main Street yet. The business is shutting down, the negative earnings, the negative GDP growth, none of that's really been posted or factored in yet. There's no telling where the bottom is, but it ain't here. I'm pretty confident in saying that the bottom isn't right now. And they've only got a few ways out of it, and either way you're going to lose. The market tanks and crashes, you're going to lose. They print their way out of it, you're going to lose. It's a lose-lose situation for the average Joe six-pack right now. And then on top of that, you got increasing COVID fears. You got the oil pump off, the dueling oil wells in Russia and Saudi Arabia. You got metals getting hammered because people are closing their paper positions, which has caused a decoupling from the physical market. So a paper price of silver and gold is one thing on the stock market. Try finding it in real life anywheres. You can't. The whole globe has been stripped of gold and silver anywhere as close to spot price. It just goes to show that the stock market is a total fraud. It's not accurately representing the prices. It's just a paper mirage. A paper mirage. Hope you got some gold and silver because everyone's printing money like it's going out of style. Cash injections handed out like candy. Placating the people with $1,000 check. Well, guess what? You're not going to go out to a restaurant. You're not going to go out to a shopping mall, that $1,000 check, because everyone's going to be on COVID lockdown. Well, how convenient is it? Everyone's on COVID lockdown. Well, the economy is in just an absolute tailspin. Pretty coincidental. I don't know. Put your tinfoil on with that one. Mull it over, ruminate on it a little bit. But there's lots going on. And if you throw your money in long right now, whew, you could get touched. It's so volatile that regular trading strategies just don't work right now. So, and even the short side of it isn't really, the ETFs at least have hit the point of diminishing returns. The volatility index seems to be broken at this point. Unprecedented stuff going on. The dollar, as of right now, the dollar is stronger than the euro. Great British Pound, fire sale prices. The dollar remains strong because it's the world reserve currency, and that's the one trick we've always had up our sleeve. But man, if the rest of the world isn't catching on to the scam, I don't know what it's going to take. We're just throwing trillions around like candy. But I think people are seeing through it this time, and there's so much pressure on the downside. There's a liquidity crunch. There's so many things that can happen. Like if you're going long right now, I don't know what you're thinking. You got the continuing oil pump. You got the quantitative easing all over the world, ECB, US. You got increasing COVID fears. I mean, we're up to the point now where we're like almost 20,000 new cases a day and over 1,000 people dying a day. And it's still growing exponentially. You got Main Street shutting down. You got a lot of countries shutting down, a lot of states shutting down. California, New York, biggest states, they're shutting down for all intents and purposes. We're heading there. We're heading there. Germany's getting touched. Spain's getting touched. Italy's getting touched. France is getting touched. The UK is starting to get touched. Norway is already shut down. There's a glut of oil. I mean, there's just so much downward pressure here that I don't think we've seen a bottom. And if you buy in right now, going long, think you're going to just hold out, man, one of these 1,000, 2,000, 3,000 point days are going to come touch you. And there's going to be someone on the other end making that money. But it's important to remember, either way out, whether the market stays up or whether the market goes down, we're all getting screwed. I need you to understand that. And listen, you got to understand central banking too. And I'm not going to do a video on it unless I absolutely have to, because there's so many other people that cover it better than anything I can do. This is Lost Jen. I'm out. Watch the markets tomorrow.